Welcome, ladies and gentlemen, once again. This is part one of the indicator series. This is the RSI, better known as the Relative Strength Index. And here we have a 1 minute chart on the ES futures. This is the mini S&P 500, and this is NinjaTrader 8 platform. If you go ahead and right click the chart, you'll get to the indicators. Here's your long list of indicators. Select the box, push R to jump down, select RSI. On your parameters, you have 14 for your period, you have 3 for the smooth. Those are standard settings with NinjaTrader 8. Will calculate on bar close. I'd like to see it on each tick because every time price moves a tick, I want to see which direction the RSI is going rather than when the bar closes. Everything else is pretty much standard, except for when you get down to lines. Some platforms have 70-30, I have 20-80, and then I have my colors set to green for the 20, so that when price gets to oversold, I want to know when I should go long, and when price gets to 80, it's red because I want to know when to short it down. Then you have their plots. You have RSI as blue, and you have an average line as well. I do not want to see the average line, so I've changed the color to transparent. Therefore, it removes it from the indicator part of the chart, and it will only plot the blue RSI line. It will also plot the lower green 20 line as well as the red upper 80 line. As you can see here, this is today's chart. After the open, we had previous news for housing and unemployment claims, and they were both better than expected. So as you can see, this is a straight uptrend market with a brief hesitation and consolidation before continuing up higher. So this is a point where if you were to pull up the RSI on your chart, it would not be beneficial. And this is the point, is I want to show you that not all indicators are 100% accurate, nor are they the holy grail. So be sure to do your due diligence, and you might need to have multiple indicators depending on what type of trade, if you're swing trading, intraday trade, day trading. But as you can see here, a little bit after 840, 843 or so, it became overbought. That's when you see the first red candle before it continued up higher. But utilizing the RSI indicator, what you'd like to see is when it gets to overbought conditions, so that red line there, that's when you would take a short position in the market and benefit from the pullback. But this chart is only going to plot the data from the last 5 days in your chart here, and you can change that to whatever you want when you open up a new chart. But that's what I'm showing you here, is this data is only for the last 5 days calculated in here. But as you can see, let's see, about 20 or 10 o'clock CST, we had a pullback in the market, and that's when it first went into oversold conditions. And that's when you could see a pullback in your favor if you were to take a long once the price retracted down and the RSI confirmed below the green line, which is set at 20. You could have, let's say, a 1-point profit and a 4-point stop loss. As you can see, it hit 1-point profit because it rebounded from that sell-off. And once it reaches 1 point, sells off. You take your 1-point profit and move on to the next trade. If it was to continue going against me, say on other news, trade news, something's being investigated, Fed's talking, could be any kind of news. Once it reached that 4-point stop loss, it would stop me out. I accept 4 points loss and move on. I'm not saying those are the set points you need to have. I'm just giving you a brief example on how to possibly trade the RSI overbought and oversold conditions. So that's a brief overview of the RSI. If you haven't heard or have heard of the RSI divergence, that is when price reaches a high point and then has a pullback. And at that high, the RSI conditions become overbought. Price retracts back down. You have price then retrace back up and in fact make a new high, but the RSI doesn't make a new high or the same strength as it did when it first broke. So you've got price uptrending, but you've got RSI diverging down. So when you have that, you have a great short opportunity at the peak of the new price that is just made a new high, and that is typically a great short opportunity. And vice versa, if price was selling off and you made a low, pulled back up to a little bit higher, and then that pullback it had an oversold condition, then continued to sell off, that could be a good indication for you to go long and then profit from there. But again, like I said, not all indicators are 100% accurate. They're not always going to win. But when you do lose, and you need to know this, is that you need to learn from your losses, but don't dwell on them. Wash your hands, rinse, repeat, move on to the next trade. Maybe you had your stop loss too large. Maybe you took it too soon. Always learn, always educate yourself, and you want to become the next best successful trader. And hopefully we've been able to help you out here, give you a little bit of knowledge to put in your toolbox. Thanks again for watching, guys. Don't forget to like, subscribe, and comment to Mass ES Trading. Thanks again, and have a great day.